All right, good evening, everyone. So, um, welcome back to our sessions. I think during the course of our last session, we discussed about, you know, inducement liquidity and engineering liquidity. So today we'll be talking about the other two types of liquidity. Remember, there are four. We have the inducement, engineering, the trend line, and the ranging liquidity. So for today, we'll be talking about the trend line liquidity and the ranging liquidity. Before that, I'll just simply give a sample of the liquidities we're talking about. Let me quickly share my screen. Okay, I think I was having a setup on me already. Okay, let me finish this up. When you understand liquidity, you're able to see this particular this thing here, and you also see this spot that price reacted to. And not only that, you will also be able to like take this trade as if you understand liquidity beforehand. And I'll call this trade already on perfect line. That's a breaker block for those of you that who have already done that. So I believe everyone should have learned about that one by now. That's a 1:23. This even on the 1 minute time frame. Obviously carry me quiet from with this chart, but I just have to show you that since I see her. So this is the break of structure around here, and this candle here indicates the pullback before the impulsive move again. So after that, price came back, took it out, routed from this breaker block here, and you can see the perfect line path to the upside. That was a 1:23. Your $100 for dog is $2,300. So back to the entire plan. All right, I'll be going with this 1:14. Yes, that's it. This is just a little bit of how you can advance your points of interest, though. We should be talking about in advanced market structure. With this, you can be able to like cash all these high risk to reward trade. Take this in 1:13. Take this trade with $100, you'll be getting $1,300 back from the market. So that's that. Let's go back to what we are starting with today. Now, for the case of this day, as you can see, this was my break of structure. You can even see our other break of structure over here. And this was the pullback. All right, you can see the pullback. And the pullback actually gave us another break of structure, indicating that this an inducement, validated this place as an inducement. So what's next is just to look for my point of interest closer to the inducement, which is this other block here. And I'll be taking my trade from this particular level. So this is how you can use inducements in the market. All right. So what I'm expecting now is that price will come here like this and tap it to here, then push to the upside also. So back to what we have today, talking about trendline liquidity and range liquidity. Now, what is trendline liquidity? Just like the name goes, trend. All right. We're talking about our normal day-to-day trend in the market. There's no much difference between trend and liquidity and trend. They are the same thing. Just that, your trend normally is when market is moving like this, it's having a direction, right? Then we also have this one. And based on market structure, we said that this one is the downtrend and the other one is the what? Is the uptrend. This is the uptrend, right? Can say it's when you put your two diagonal trend line, which indicates trend, you can see that this thing is moving to the upside and this is our downtrend, right? So you can see that this our normal trend in the market. Now the trend line liquidity did not differ from this. Now after going with the advanced market structure, you should know that over here, sorry about that, over here we have set side liquidity, over here we have set side liquidity, over here we have set side liquidity. Now over here we have buy side liquidity, over here we have buy side liquidity, over here we have what? Buy side liquidity, right? So now what actually differentiates the trader liquidity from the other liquidity is that the trader liquidity is more or less an addiction of how should I say, when price is already having a trend. Now, whenever market is trending up, market tends to dump liquidity at the other side. All right. Take for instance, if we're having an uptrend, market tends to drop set side liquidity at this other side that price will not take out yet until, remember the rule of advanced market structure, or rather the rule of external liquidity, one of them that says that price will only take out one particular type of liquidity until it gets to its destination. So ever since price have been doing what? Taking out just buy side liquidity, buy side liquidity, buy side liquidity. Excuse me. They might give all these break constructions to the upside, right? So now, the moment price gets to its destination, up, what you should be expecting is that price is going to come back for all sell liquidity that price have left behind. Take that to three. Price is going to do what is right now. When price take out all those trade liquidity, for price then be free to actually do what? Continue the market, because if price starts by until this first one took out this first liquidity after getting to its destination, know that this one is next. After this one, know that this one is, until price clears off this full trend line liquidity, market will not be balanced to move to the other way. And with that being said, trend line liquidity is actually one of the most important, one of the, should I, is broad. It says that with trend line liquidity, we to points of interest. Take for instance, I see a market like this, want to buy. I'm not going to buy it come and look for another block here. No. Why? Because I know that when price is coming back, all this excess liquidity will be wiped out. None of them will be able to hold price. So with that being said, I will not wait for market here, but rather I will wait for market to close off this trend liquidity before we enter the market. So you can see that it's a tool, is you can identify trend liquidity in various ways. Now, this is the most important, this is the, for the, should I say, one of the top one that we use, right? In which, take for instance, let me use a clear shot there. Um, okay, we're in a downtrend before. Now we have our break of structure. followed by the trendline liquidity to the upside. Now, the origin of the trendline liquidity, until price take out the origin of that trendline liquidity, price is not going to stop, right? Price is not going to stop until you take out the origin of the trendline liquidity. Now, what do I mean by the origin? I'm coming. This was the last sell side liquidity that price took out, right? This was the last sell side liquidity that price took out before giving us this market structure shift at this particular level. So, with that being said, the place that caused that market structure shift before the newly before the start of that particular trend line liquidity, the place that caused that market structure shift, that is where we regard as the what as the origin of okay, that is where we regard as the safe place. All right, this is the safe point. Right, all this is the origin of the trend line liquidity. The origin of the trend line liquidity will most likely be like an inducement. All right, most of the times is given in the form of an inducement, the origin. That will be it will be in the form of an inducement because this place was supposed to be used as an inducement. When I say an inducement, I mean something like this. Now we know that price is supposed to take out this place and do what and come into here before push it to the upside. But price has failed to do so. What did price do? Instead, he reacted from the inducement. All right, he reacted from here, from the inducement and continued to the upside. By so doing, this inducement will still be the liquidity on a long term. But on the short term, price will most likely create new liquidity for it to push higher, right? But this inducement will still be the main liquidity, all right, for this origin. So whenever price has gotten to its destination, price will have to fall back to its origin. That simply means that the other block that will be around here, right? That other block will then be the one I want to use to cash that particular trade. So this is R, it should be. And then your target, because once price is coming back, now, okay, we're talking about targets after market, advanced market mechanics, because your target is one of the most crucial, this your take profit level of a thing is one of the most crucial this thing when it comes to the market after you have learned the ability system. Target is very, very important, right? So we come to that after advanced market mechanism. But this is how you want to use your trend line liquidity. With this will be the origin of that particular trend line liquidity. So this is all about trend line liquidity. Just see that trend, right? That trend. As you can see, if you look at it very well, this is basically a demand trend. That's why it's called a trend line liquidity. It's a trend. You can see the trend like this, but the trend is very weak. So as so far market is trading, market is dumping liquidity. And when it's time to come and sweep out that liquidity, that's when you will see the massive sweep. That price will target the origin of that particular trader liquidity. All right, before going to the origin that caused the market structure shift or the break of structure before the trend line liquidity. All right, so that's all regarding trader liquidity. Let's see further we can identify some of them in the chart. I think this was a setup of mine a few days ago, and I was using trader liquidity actually. That's check. This was a trader liquidity over here. This is a trader liquidity. You can see the first one here. second one here, and the third one here. So I was expecting price to come back close this trendline liquidity, but fortunately it came back here and gave me a double bottom due to the fact that this is mass period of a thing. And markets is more or less lacking liquidity a little bit to actually push to its main destination. That's why you can see that market is ranging, all right? And because of this ranging, that's why it did not fulfill its criteria, but rather it got to this particular spot here and reversed. Now, when price was coming, first of all, there was this trend line liquidity here. You can see this is a trend line liquidity. Now, when price was coming, price then gave us another trend line liquidity again to the downside. All this was their trend line liquidity. That's why I came to GJ specifically because it's a kind of pair that you most likely see trader liquidity in it. Now, what happened? Price first of all came here to clear off this trader liquidity. So they did not clear it off completely, but that was the reason why price came back here. And after which price pushed higher to come and clear off this other trader liquidity that he used to approach this spots here. So push back up to come and clear it off, all right, before reacting from this other block here and then push it to the downside. So that's for that. Let's see if we can get more examples. Now, this is a clear example of trend liquidity. You see this one? This is a trend liquidity. And what happened after price goes to its destination? I think this should be a breaker block. Just like I said, it's a breaker block, this one over here. Well, let's look it out. So after price reacted off from that particular zone, what happened? It pushed down and clear off this particular trend line liquidity. So this is a market usually used to take a trend line liquidity of and all that. So let's see, let's continue session. Just like I told you guys, GJ is more or less like a market that usually used to clear off trend line liquidity. Go out to the lower time frame, 5 minute time frame, see that this is actually a trend line liquidity here. And what happened? After price got to its destination, it pushed back and clear off the origin of this trend line liquidity. Then use the other block here to dump price to the downside. So you can see our markets usually, even this one over here, this is a trend line liquidity. And what happened? You can see the fall afterwards to clear off the origin of that trend line liquidity. All this was, if you go back to the lower time frame, you see that all this was their just trend line liquidity in the lower time frame. And what happened? Price came back and cleared it out. Over here as well, you can see the trend line liquidity. So it's just something that you see most times in the market. And what happened? Price took it out. So I want to see a practical example. You can see this for that. This was a practical example here. You can see the line here. This is a trend line, the pure one. Just that it's not yet time for GJ to actually pull back. It's not yet time. All right, this is it. So as you can see your trader liquidity here. And what happened? Market cleared it out. Took out the origin, right? Over here as well. These three tops. What happened? Market took it out and reacted from this other block here. Then push price to the downside to come and clear off this trendline liquidity. Now over here as well, you can see this trendline liquidity here. What happened? Market came back, clear off the origin of the trader liquidity after clearing it off. Now, to clear off this trader liquidity, market also used trader liquidity to approach it. So after clearing this one off, it came back and did what? And started clearing off this trader liquidity that used to clear off this one. Now, process of doing that, it created another trader liquidity again just to clear off this one. That's why market came back up again to came down again to clear off this one in particular. All right. So this is why we always tell you guys that the basis of liquidity that market moves towards liquidity. Now inside it, you can also see your trade again inside. Your trader liquidity is inside this one. Price approaches points of interest using this trader liquidity and what happened? Top afterwards to clear off that trader liquidity. This is another one. Use trader liquidity to approach points of interest and what happened? Top afterwards to clear off that trade line liquidity. So you can see our price move this GJ particular uses trader liquidity and others. So that's for that. Let's go over to your ranging liquidity. What exactly is ranging liquidity? Now, just like trader liquidity, if you guys remember fully well, I told you guys that hey, just a moment, I'm coming. So I told you guys that we have three market trend, right? Which is the first one, we have the uptrend, we have the downtrend, and we have a special one, which is the ranging market. It's rare to see a ranging market, but when it happens, you most likely know that this is a ranging market. When the market is not giving you any direction at all, it's neither telling you that, okay, I'm going to the upside or I'm going to the downside. That is a ranging market. Apart from the other two market, which is the uptrend, also known as the supply, the demand trend, or the bearish trend. We also have the bullish trend, I mean to say. Excuse me. We also have the dark trend, which is also known as the supply trend or the bearish trend. So with those ones in mind, we also have the other type of trend or market system, which is excuse me, which is the ranging market. Now, in a trend, you want to see this. This is what we want to see in the trend. But in the ranging market, this is what usually used to happen. This raging back area should most likely be seeing your equal highs and your equal lows, right? So I don't need to explain raging back cases. We've already done that before. So this is a raging market. Now let's talk about the raging liquidity. Now, as price is doing this, you remember what liquidity is all about, right? It's where yes, following the market, where retail traders will most likely be placing their stop losses of it and all that, so that the smart money guys, knowing that retail traders are placing their stop loss there, they will do what? They will strike all those places, right? And normally in a raging market, you receive most of your registration as actually those that use support and resistance. They'll be placing their stop loss just above this resistance level, and your this will be placing their stop loss just below this support level. So with this, your smart money guys know that there's liquidity resting above here. That means there's money here and there's money here. So what will they do? They will look for this thing that's a liquidity stop and a liquidity run, in which if the trend is an uptrend and you see this particular resistance, just know that there's a possibility that market will do this. Take off the liquidity of the downside, stop out all those people, and then push to come and hunt these people at the top side. All right. So this one at the bottom will be a liquidity. Excuse me. This one at the bottom will be a liquidity stop because they have just stopped at all those people that their stop loss were resting at this particular level. So they have ordered those their stop loss. Now the next one will be a liquidity run in which market is about to now go to its true direction. All right. So this is what usually is to happen in a ranging market. Now, these same concepts have been used over and over again. Take for instance the case of AMD, right, which is accumulation, manipulation, and then distribution. In which first of all, we see markets accumulating first. And after the accumulation, you want to see a sweep. That means we now have liquidity rest here, we now have liquidity rest here, right? This is the accumulation phase. So what you want to see this is the manipulation. This manipulation, they be the one to like manipulate retail traders, take out some here and make others feel like market want to do what? Market wants to short. And then what will happen is we see a push to the upside, which is the distribution. So this is the accumulation, this is the manipulation, this sharp move here, just to hunt liquidity. Most of the time, most likely see that that's a weak. Then this is the distribution, right? Now, this is something I've been using for quite some time now. When you combine it with whatever you have picked up so far, it will be very easy for you to kill the market whenever you see raging liquidity. Because what you just need to know is that after you see raging liquidity, just know the trend of the market. If it's an uptrend, you want to look at for your demand zone at this particular level that you want to do what? You want to take the market for that demand zone so that by the fact when they are going to manipulate, after taking out all these people, then they will manipulate into your demand zone, your trade will trigger from there, and then what will happen? Straight to TP. And the pump that usually is to come after that usually is to be massive, right? But regardless, the market is the one in charge of anything. So this is basically your ranging liquidity. Nothing much than this. All right. I think other people usually used to call it the double top or the double bottom liquidity, but this is your ranging liquidity. Just like it goes, it's two-sided straw of a thing. Or that both buyers and sellers simultaneously. So that's for ranging liquidity. Let's see further we can identify few of it in the market. It's not actually that hard to identify ranging liquidity though. Just look at for where market is trading. And we have our scapegoat here. Now what is happening here? I'll go back to the 45 minutes. You can see that market is trading at this particular level. And then what happened next? There was a manipulation to the downside. This manipulation took out everything regarding this range, right? Even using this one as an inducement, routed from this advanced breaker block here. And after which, you saw the push to the upside. So you can put your TP here or you can leave your TP at this particular level. That's a 1 ratio 14 trade. Let's look for more. Honestly, honestly, I've been following GJ for quite some time now, and I did not know how I was able to miss this particular setup. It, it's in a baffle me up till now. I don't know how to miss them. This is a perfect trading liquidity. Now, you can see our perfect order block here. Or rather, let me use an advanced breaker block. Up till now, I swear, I still don't know how this trade escaped me. Wait, I did not catch this trade. I did not catch this trade. That's a sharp 1:5. A sharp 1:5. But I missed it. I'll still try to remember I missed that trade though. Well, that's how you can use your raging liquidity. All right. You just need to look for where market is raging, and then you wait for it. All right. Just wait patiently. Market will market with market will deliver price into your hand. Oh, sweet. See this one. Your raging liquidity are there. Granted of this fair value gap here, where you can go with this breaker block instead. And you can see target was smashed. Now, just a tip for your target. Use liquidity as your target because you now know that markets move towards liquidity. So your target should be a liquidity level, right? Because that's the reason why markets will go to that particular level. So try to make sure that your target is a liquidity level. Now over here, you can still see your listed, your inducement, and then markets used to use this breaker block, advanced breaker block at this particular level. And then push her to smash TP. So if you're conversant with this market, I'll have caught this one, I'll have caught this one as well. I'm sure I caught one of those, not say sure, but I'm sure I caught one of those. Perhaps about that shot, most I can see there. So that's for all. That will be all for today. Any question regarding our class so far? Any question? Do we all understand everything regarding the trend line and the region liquidity?
Yes.
All right, I've saved it in the chat already. All right, then. So the recording will be made available pretty soon. But for now, good night, everyone.